look, $100,000 has been a massive mental level for people. You know, it jumped over it, came back, jumped over it, came back, jumped over. It's done it like 4 or 5 times. And I believe that there are some, the OGs, people have been holding on to this thing for a very, very, very long time. And they've made life-changing wealth, and they're going to enjoy it now, and they're cashing in a little bit. And, you know, that's okay. They have way more than you and I do, and they're just cashing in, and that's okay, you know? But I don't believe it's being suppressed. That's not my belief. Is it possible? Sure, of course it is. But I do believe that institutions are now in here and taking advantage of this volatility. And once it does get over 100,000, stays over 100,000, and that mental level is gone, then that becomes a support level. But we're not there yet, at least not today. So
James Lavish clarifies a significant shift in international marketplaces. Investors are turning their attention to hard assets like Bitcoin as worries about debt, inflation, and currency devaluation intensify. Lavish highlights that institutional players are now setting themselves up for exposure after previously being constrained by rules and practical challenges. Hedge funds, pension funds, and sovereign wealth funds can now deploy capital more effectively thanks to the approval of Bitcoin ETFs. Lavish also cites the growing participation of large asset managers who are using complex techniques like as derivatives and structured products to maximize their exposure in addition to simply purchasing Bitcoin outright. This change ushers in a new era of institutional adoption with potentially significant ramifications. If you're intrigued by bold predictions and deep financial insights, make sure to like this video, subscribe to the channel, and turn on notifications for more engaging content. Thank you for your support and enjoy the video.
And I'm seeing institutions come into the space and start buying. And it's interesting because you hear of the big players and some of the big banks who are buying MicroStrategy and some of the big banks who are buying some IBIT and whatever, and some sovereigns. But just talking about institutions and ones that you would never even heard of, like for instance, I was talking about this the other day that when you look at the ETFs and the holdings of ETFs, sometimes you have massive players in there that people would not even recognize. And so one of those players is HBK, and this is a Dallas investment firm. It's a Dallas huge hedge fund. How are they investing around it? I don't know. The options are likely a very big deal to them because they can manage risk around it, and now you've got that ability to do that. So the point is that now we're starting to see players come into the space that may not have come in before because of those operational issues. Now, even hedge funds. But forget about pension funds and endowments. They couldn't come in before the ETFs. Now they can. Mm-hmm. So, but as Bitcoin does solidify itself as an asset in that total investable universe, and that volatility does dampen a little bit. I believe it's going to continue to be volatile for weeks and weeks, or months and months, and maybe some years here, likely years here. But once it does that, then it starts to draw from the rest of that investable universe, not just from stocks and risk assets, but now it's going to draw from bonds and from real estate, because it's an easier asset to get a hold of for real estate than, you don't have to have management and oversight and maintenance fees and all those costs involved. Super simple. It's just a store of value rather than have an illiquid store of value of real estate. You have a very liquid store of value in Bitcoin. I believe that will be one of the buckets it starts to draw from. And then obviously bonds, with everything we're seeing that's going on the sovereign level, and how all of that debt and all that risk in the great financial crisis was kicked up to the sovereign level. Mm-hmm. Now we have a problem there, and we have necessary debasement of our currencies, of our fiat currencies that you talk about all the time, that bond investors are waking up to. And they're realizing they need a better return on their longer dated bonds in order to get a real return against actual inflation, not the CPI inflation, but real inflation.
Right.
And so that's a kind of a big picture overview of where we're at and where Bitcoin kind of fits in, but it will eventually start to draw from those other asset classes, I believe. No, I just think that truly, look, $100,000 has been a massive mental level for people. It jumped over it, came back, jumped over it, came back, jumped over. It's done it like 4 or 5 times. And I believe that there are the OGs, people have been holding on to this thing for a very, very, very long time, and they've made life-changing wealth, and they're going to enjoy it now, and they're cashing in a little bit. And that's okay. They have way more than you and I do, and they're just cashing in, and that's okay. But I don't believe it's being suppressed. That's not my belief. Is it possible? Sure, of course it is. But I do believe that institutions are now in here and taking advantage of this volatility. And once it does get over 100,000, stays over 100,000, and that mental level is gone, that becomes a support level, but we're not there yet, at least not today. So
institutions are starting to see Bitcoin's potential, but Washington's political elite is still mostly in the dark. According to James Lavish, the majority of policymakers still view Bitcoin as a risky, specialized asset rather than a respectable financial instrument. He highlights that Bitcoin hasn't yet attracted significant political attention because of its market capitalization, which is currently at $2 trillion and less than Apple's valuation. But the conversation is beginning to change. Lavish views the fact that Bitcoin is even being considered in policy circles as a significant step forward, even though he does not anticipate the U.S. government creating a Bitcoin strategic reserve anytime soon. He also emphasizes that, despite the slow pace of legislative proceedings, the regulatory environment will play a significant role in determining Bitcoin's destiny at the national level. This growing awareness marks a turning point, one that could have lasting implications for Bitcoin's place in the financial system. Please take a moment to like this video, subscribe to the channel, and enable post notifications for future Bitcoin, macroeconomic, and digital asset content before we go any further. Now, let's get into his powerful predictions.
And so what institutions are starting to wake up to, slowly, but they're starting to, and we're explaining it to them, we're teaching them this, is that if you look back over the period of the last 10 years, and you just look at the classic 60-40 portfolio, and you added any allocation to Bitcoin to it, it enhanced your returns dramatically. It only raised your volatility a little bit. And so it raised your Sharpe ratio. It made your portfolio a better risk-adjusted return than without Bitcoin. And that blows investors' minds. They can't believe it. They think that's just not possible. But it's because that it is volatile, but it's a volatility in a rising asset over time. And so if you hold on to that for a few years, it will enhance your portfolio undoubtedly, at least if you look back over the last decade. So if you pull up, like we can pull up the a 60-40 portfolio, and you can see how those Sharpe ratios they're affected. So I analyzed this for one of my newsletters, and if you look back the last 10 years through December through 2024, and you had a 60-40 portfolio, your return over those 10 years would have been 8.5% annualized. Okay, over that period. If you added just 1% of Bitcoin, just one, then your return would have gone up to 9.7% annually. So that's another 1.2% annually. So your entire return goes from 132% over those 10 years to 159%. Okay, but here's the crazy thing: your volatility is very similar. It's still 0.57% daily. And annualized, it went from 10.86% annualized volatility to 10.9%. That's it, just 4 basis points higher, which took your Sharpe ratio from 0.63 to 0.73. Okay, so we know that the bonds were volatile, so your Sharpe ratio was not that great over the course of that period of 2021 to 2023. So we know that, and it was. But if you added Bitcoin, it enhanced it. If you added 5% of Bitcoin to your portfolio, your total return went from 132% to 290%, and your annualized return went from 8.5% to 14.2%. Like wow. Insane,
what
right?
A sweetener.
What a sweetener! Your volatility only went up to 11.7%, so it's less than 1% volatility rise, which took your Sharpe ratio up to 1.06. So you're a better Sharpe ratio. So now you're over that 1.0 kind of threshold for your Sharpe ratio. And then if you added 10% of Bitcoin to your portfolio, your total return would have gone from 132% to 520%. And your annualized return went to 19.5%. Your volatility only went up to 13.75% from 10.86. Yeah, it's more volatile, definitely. It's 3% more volatility annually. But your Sharpe ratio went to 1.29. Yeah. So it still went up. A lot fewer people in DC understand it. And I think the vast majority of them are not worried about it at all. And I don't think they care about it. They just think it's some speculative asset for, a small portion of the constituent that is very vocal about it, but it's not that big of a deal. It's this little $2 trillion asset. It's smaller than Apple, So, but by and large, I think that they will come around to it eventually, and they're having the conversation. And that's probably the most important part.
Mm-hmm.
So if you want to talk about, this administration, how positive it is, it's that we're now having the conversations.
Sure.
Do I think that we're going to have a Bitcoin strategic reserve this year? No, I think it has to run through a gauntlet of legislation and committees, and it's just going to take forever.
Yeah.
So nothing happens quickly in DC, or at least not in Congress. Maybe it does in the executive office now, but not in Congress. So, yeah, I think that it's going to take time. I don't think we're just going to rush out there and start buying it. Could we have some sort of NGO that's doing it? Well, we've seen that that's possible. We could.
Yeah.
I just don't think this administration is going to do that, especially after cracking down on all of them. They're not going to go and put a black mark on their record by doing that. That just doesn't make any sense to me.
James Lavish explains how even just a small amount of Bitcoin may greatly increase returns with little increase in volatility when added to a conventional 60-40 portfolio, which consists of 60% equities and 40% bonds. A typical 60-40 portfolio produced an annualized return of 8% during the previous 10 years, but by including only 1% of Bitcoin, its yield increased by 1% to 10% each year. Even though Bitcoin is known for its volatility, the risk of the portfolio only marginally rose, increasing the annualized volatility to 11%. Lavish highlights that even more remarkable outcomes are possible with greater Bitcoin commitments. The 10-year return climbed from 132% to 290% with a 5% allocation, and the annualized return increased to 14%. The portfolio's overall return surged to 520% with annual returns of 19%, despite a 10% Bitcoin allocation that increased annualized volatility to 13%. This demonstrated Bitcoin's potential as a potent portfolio enhancer by raising the Sharpe ratio to 1.2. Lavish discusses the macroeconomic environment in general in addition to portfolio performance. He points out that Washington politicians are still mainly uninterested in Bitcoin because they see it as a specialized speculative asset. Discussions concerning Bitcoin are becoming more popular in policy circles, even though its $2 trillion market capitalization is less than Apple's valuation. The fact that these discussions are taking place at all is a big step forward, according to Lavish, even though the US government is unlikely to establish a Bitcoin strategic reserve anytime soon. Remember to like this video, subscribe to the channel, and enable notifications if you thought his viewpoint was helpful so you don't miss any updates. We'd love to know what you think about the future of cryptocurrency markets, so please share your ideas in the comments section. We appreciate your time and hope to see you in the next video.